everybody, it's Maureen Lein, your local lender right here with your weekly Mortgage Minute. Today is Wednesday, November 26th, Thanksgiving Eve, and I want to let you know how thankful I am for all of you that tune in each week, and I hope you have a wonderful holiday tomorrow. Now, the stock and the bond market both will be closed tomorrow in recognition of the holiday, and they'll also be closing early on Friday. So let's jump into the data because yesterday was packed and almost all of the information that was released came in weaker than we expected. San Francisco Fed President Mary Daly said that she supports a rate cut in the December 10th meeting. And this is due to the sudden deterioration in the labor market, and she also sees a low risk of an inflation breakout. Treasury Secretary Scott Bessent noted that the next Fed chair announcement could come even earlier than Christmas. Okay, so let's talk about the labor market. ADP's weekly job insights showed that an average of 13,500 job losses came per week in the 4 weeks ending November 8th, which was significantly weaker than the prior report that was revised from 2,500 to 7,500 losses. Unemployment is still historically low, but has risen for 3 straight months and is well above the 2023 low of 3.4%. After the ADP release, markets pushed the odds of a December rate cut up to about 85%. The Producer Price Index PPI came in right at expectations. Headline inflation up 0.3%, and it is up 2.7% year over year. Gasoline jumped 11.8%, which drove that increase. Core PPI rose 0.1% and is cooler than expected, with the year-over-year core dropping from 2.8% to 2.6%, which is more signs of easing inflation pressures, guys. Retail sales rose 0.2% in September, which was half of what was expected. Core retail sales, which feed into GDP, actually fell 0.1% versus 0.3% expected rise. Clearly, consumers are slowing down, which could contribute to weaker economic growth, softer inflation, and a cooling labor market ahead. In regards to the housing market, the Case-Shiller Index showed home prices are up 0.2% in September. This is the second straight month gain after 5 months of declines. Now, year-over-year appreciation moderated slightly to 1.3%, and beating the expectations was the pending sales, which jumped 1.9% in October. Year-over-year, they're nearly flat at 0.4%, but this is the third consecutive monthly increase and the strongest pace thus far this year. This, combined with stronger new home sales, well, this is pointing to a more solid existing home sales number for November. All right, so now let's talk about mortgage applications. Purchase applications, well, those rose 8% last week and are up to 20% year over year. Refinances dipped 6% for the week, but remain up 117% from last year. The initial jobless claims fell by 6,000 to 216,000, showing firings are remaining low. However, continuing claims ticked up to 1.96 million, near a 4-year high. So, sustained story we've been seeing, guys. Low firing, low hiring, and tougher conditions for job seekers. Let's talk durable goods. Well, those orders rose 0.5%, beating expectations, and core durable goods rose 0.9%. Core shipments, which feed into GDP, also rose 0.9%, hitting at a slighter GDP revision number. This contrasts with yesterday's weaker retail sales report, showing some mixed signals across the economy. So, guys, that is it for this week. I thank you for tuning in. Please remember to like, subscribe, and share, and also have a wonderful Thanksgiving tomorrow. We'll see you next week.